Tesla is arguably one of the most controversial stocks on the US stock market. It's a very polarizing stock. You could either believe that it's really undervalued or a company with awesome years of incredible growth, or you believe it's one of those overhyped stocks. To me, you could be right on both sides. It just depends on the timing of those views. In fact, if you look at Tesla stock, after the 2020 crash, ran the Tesla stock increased by over 1,300%. So the pessimism towards the stock is understandable because the earnings and revenue were far from being able to justify at that time. But the stock has lost 65% of its value from its high of November 2021, from $407 to now $110. So we have to ask the question, is Tesla now selling at a discount? What is the future outlook of Tesla? Can we expect another 1000%? In this video, that's what we'll explore. We'll look at the company's future outlook, and I'll look at the financial performance and whether or not I think the stock is undervalued or overvalued. To really understand the controversy and cult-like following of Tesla, you have to really go back to the early days of the first founders and Tesla Roadster Club. Without strong supporters and fans, Tesla maybe wouldn't be where it is today. The cult-like following followed Tesla after Tesla was listed on the stock exchange. And Tesla was the first company to make an electric sport car look fashionable. Tesla had changed how people think about electric cars, from little ugly cars that nobody drives to rappers bragging about their Tesla. On date, today, I've seen where Tesla has risen by 5%, almost 6%. But Tesla is a stock that you really have to really look deeper within the surface level to understand this company. So it is a $382 billion cap stock. The industry is where that they has listed on this platform that I mean is automobile, but we know that Tesla is more than an automobile company. The company currently has a PE ratio of 34 and a price to free cash flow of around 42. So some persons will view these valuations as high, but I'm going to look into the company numbers to really see if I can justify these numbers. So year to date, the company has a debt to EBITDA ratio of 0.22, which is very good. The company is clearing off its debt. And if I look at the last financial statements, you can see where the company's debt is decreasing significantly. And the shares is not increasing much. So it's really average. Current ratio is also good. Profitability now, the company has a net margin of about 15%. Free cash flow margin of around 12%. Cash conversion of 80%. So Tesla is a company that don't have any cash flow problems for sure. Revenue has increased by 60% year over year. Gross profit increased by 84%. Net income has increased by 222%. So the company is healthy and the company is growing at a fast rate. The question is, will the company be able to maintain this growth? Returns on equity has been 28%. Return on assets, 15%. Very good. And if you look at the company's valuation against itself, The current PE ratio of 31 is below its 5-year average of 221. So this to me is telling me that Tesla could be undervalued to trading to itself. And then its price of free cash flow of 40 is below its 5-year average of 140. This is also very good. Price to sale is 4.8, below its 5-year average of 9.8. The PEG ratio is 0.39. So this is also good. So Tesla seems to be undervalued when you look at it from a surface level. No, I'm gonna look at it on the free farm and yeah. So yeah. So looking at these statistics, the average adjust this 2014, 2018, 24, that's 5 years. So Tesla price to free cash flow, the average free cash flow over the last 5 years has been 133, and it's been up to a high of 494. It's now at 40. So it's trading low comparing to itself in the past. The net margin has increased significantly to 15%. So at this moment in time, Tesla has one of the best net margin in the industry. If you look at it versus a company like BYD and Rivian, long-term debt has been decreasing significantly also, and revenue has increased at a compounded annual growth rate of 48%. Net income also has been increasing. The company had only been profitable around 3 years now, but since then the company has been growing steadily. And I want to look at it from this cash flow. So based on the company prospect with its semi-truck, its Cybertruck, and the new tax laws that the companies will benefit, such as the Inflation Reduction Act, I believe Tesla is a company that will continue to grow significantly, because Tesla is becoming more innovative and more efficient at its operation. On December 1, Tesla began releasing its semi-trucks, and its first customer was PepsiCo, where they had already ordered 100 semi-trucks. So the semi-truck industry is one of potential growth. This is an industry of around $45 billion per year. So if Tesla can really get a portion of this industry, this could be a new revenue. This could be new revenue for Tesla. And Tesla Cybertrucks, this is another potential area of growth. Elon confirming his Q3 release that they are working on a smaller EV, and the aim will be to make this smaller EV about half the cost of Model 3 and Model Y. And this could be a game changer for Tesla, because if he's able to get a foothold in this segment of the market, that could mean significant growth. And he is expecting that producing this new model at around $18,000, $20,000, because the Model 3 and Y cost around $40,000 and $58,000 respectively. This will enable Tesla to compete and gain way more market share. So this company has a lot of earning potential in the future. So if we should make a projection, this is what it would look like. Remember, I shared the revenue growth over the last few years. Tesla revenue over the last year has grew by 60%. And with the new old incoming products and the new policies that are benefiting EV companies and the whole industry, Tesla could get significant growth. So some persons are saying that Tesla will decrease significantly. Its market share is decreasing, but at the same time, yes, the market share is decreasing because there are more competitors coming into the market. But the EV market is growing significantly also. So even if their market share is declining, they will still be able to have a high growth rate because the EV market is growing significantly. According to the global EV market is projected to reach $846 billion by 2027. Currently, it's projected to reach 451 billion in this year, 2023. So with this growth rate, you can see where if Tesla is able to maintain its position as it's by far the most advanced EV player in the market, and then remembering that Tesla is not just an EV company, is also they have the solar business and their energy storage business. So when you look at all those factors, you can imagine that Tesla will continue to grow at a good rate. So I'm going to look at this valuation tool and this Stock Unlock website that I'm looking at. So last year, the revenue grew by 60%. Net income grew by 221. Let's say things are not as good as that as last year. We're going to say 35%. I'm going to say shares outstanding grew by 3%. And as I say, Tesla is a stock that the earnings ratio has always been, as they seem to be overvalued, at least by, seem to be traded at a price to free cash flow at about $141 up to $200 plus dollars. So we're gonna say that the price ratio gonna be 35, and we're being conservative here, and a discount rate of 10%. When you look at this, that means the stock would really be undervalued for the next 5 years. That means that the stock fair value according to this website will be $300. Future value can be almost 400, near to $500. And I mean, I think that the price currently at the moment is more justified, even though there's some form of speculation when it comes down to Tesla. The reason being is that some aspect of the potential is yet to come. Some aspect of Tesla is yet to be realized. So I definitely think that Tesla is a company that has the potential for huge growth, and if you can bear the risk, I think it could be a good buy. But if you're not a person who is able to take on this risk, you should stick to other company, the S&P 500, or dividends, or some. No, let's say if the company was to really do better than we are really projecting it, because we are being conservative right now. Let's say the company is able to grow by 60% or 50%. The company could potentially go to $800 in the future, and a fair value of $500. And you have to bear in mind that we are trying to invest with some level of margin of safety. So it's a stock to watch at the moment. I don't really think I would buy past $125, but with the current future projection that this company has potentially I think I would be willing to buy within 120. So it's something that you could look at. Let me know in the comment section what you think about Tesla. It's a start that I was trying to start to cover more as they release a quarterly earning and all of that.